This is why I say Wednesdays. I absolutely hate Wednesdays. Today the market did absolutely nothing, nothing at all. The market was just boom. You go up, you take down, hit your stop loss. Next thing you start to push down. Next thing you push up, hit out your stop loss. It's almost like, and this is from my observation. I can be wrong. It's almost like the market has like a lower liquidity on Wednesdays to the point where some market manipulators can kind of step in and kind of push price around. And as it pushes price around, if you're one of the victims trading on a Wednesday and you have a clear reachable stop loss, it's probably going to hit you out. The other factor about today was that Jerome Powell was speaking in front of Congress. That could also have some factor to play into the price movement as well. But really, for me, says, all right, bet. Let's get into these trades today. So I took 4 trades today, right? One to the buy side, um, one to the sell side, two to the buy side, two to the sell side. All right. So the trades weren't all like a big swing. So I could have my stop loss like on a better trending day when these would have moved much better. I would have been risking a lot less to make more, and that's what I'm kind of aiming for. So let me show you the first trade now. The first trade was at 950, and let's see where I entered, why did I enter, and how it played out, right? So the first trade was 950, and yep. So look at this now. So the first trade was 950. How can I remove what's this session thing? Let me remove this real quick. Try to remove that. Okay. And also the trend fill. Let me show you exactly where I entered today. I can actually hide the EMAs. I didn't use it today. And remove this trend line. Alright, so perfect. So at 950 today, 950, it was within this candle. And where is this? Okay. So at 950 today, let's get you over here. At 950 today, this is where I entered. So I could see, you see, you have this push down here. Let me actually show you how. Let me remove the SMAs and just have the engulfing candle set up for you. So this was today, right? Um, I had a bearish engulfing candle, but sometimes when I see these candles, it can almost be fake outs. So I'm seeing a bearish engulfing candle, and then I see another bullish candle print. So I entered on the bullish candle as soon as it. So I got the alert for this, and then I took a look at the charts. Then I could see that the MACD had like a small bullish candle, and it seemed like it would have trended up. And also you have like the selling pressure wasn't strong either. So the selling pressure wasn't very strong, and then you have like a small bullish candle starting to form. So from there, I was thinking it would at least go bullish for some time. But as you can see, the next candle right after that was like a big push down to easily hit me out of my stop loss. Can see that it hit me out of my stop loss within let me show, like around 6 minutes. So I think it was within the same candle it hit me out of my stop loss, but still, the next position would have done it either way. Okay. So I use this to mark it up. So let me see. I entered 296.25, right? Usually I go for a 2 to 1 risk reward, so I can even put 200. So 200 ticks, right? So that's a 2 to 1, and then my stop loss was actually at 29641. Is that accurate? No. Buy side 296. Oh, my apologies. My apologies. My stop loss was at So with a 2-to-1 risk reward, my stop loss would have been at, no, this is the take profit one. My apologies, I'm a little tired. I don't want to give no excuses though, but let me show you. So this is where my stop loss would have been at. My stop loss would have gotten hit out at the next candle, but I actually manually closed it. I just didn't like how it was playing out, so I manually closed it within 6 minutes for profit of, call it $13 flat, right? Second trade was to the sell side, right? So I entered 1003, 1003 to the sell side, 100 shares again. So 1003 to the sell side. So let's look for the 10 o'clock candle. And let me show you. This one definitely came down and hit me um at my stop loss. So I entered at 29573, right? 29573. Take profit. I usually go for a 2-to-1. And then my stop loss was actually not a dead 2-to-1, but like, let me show you something like this. No, what are you doing? So enter to the sell side. Entry price 29573, right? Stop loss 29599, right? And take profit 29373. Okay. So this is where I had my stop loss. Tight, 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 tight stop loss. So that's why it only hit me out for $27.50. Either I had the tight stop loss. Yeah, I had a very tight stop loss. So as it began to push down here, I just entered and I wanted my stop loss to be around here where the bottom of these candles were, right? So that was the second trade for a loss of $29 max. The third one was to the buy side. So let me see. So this was at 10:30 and I think it was off this. Yes, I had a bullish engulfing candle here. So I entered to the upside here, and he also had the MACD confluence as well. So the MACD seemed like it was going to continue to the upside, to which it did, but I'm wondering what happened. Probably it just came down and hit my stop loss eventually, but let's see. And it's good that I'm reviewing these trades because I can actually see where I messed up. So 297.05, and then I go for a 2-to-1, so 200. I'm aiming for $200 per share per trade, and then my stop loss was at 296.45. So this was a 3-to-1 risk reward trade, and I had my stop loss. Let's see why I would have had my stop loss there. My stop loss was a bit below the same candle that I'm entering, so it was a bit below. However, the second candle hit me out, and you can see that even towards the higher end of things, I wouldn't have gotten my take profit either way. So I probably would have went up and came back down, hit here for my stop loss, and just be out of the trade, just wasting a lot of time. So this is why I actually like day trade. So the point is, all right, so sorry about that. The battery just died. But as I was saying, this is why I prefer day trading, because with day trading, you know if you are wrong very quickly, or you know if you're right very quickly, and you're either in the trade, allowing the trade to ride, or you're quickly out of the trade, right? So the last trade for today was to the sell side. And as you can see, like the market was very whipsaw today, just very up and down. And even though I could catch some of the bottoms, I still had the bottoms weren't definite. So every time I would enter on the bottom, they would wick down, hit me at the stop loss, and then continue to go up in the direction because I could actually see the direction from the MACD. So I entered the last trade at 10:53, and at 10:53 I entered to the downside. Um, to the downside, so that would have been the 10:45 candle. So I entered to the downside, and then I got quickly hit out at 11 o'clock as the market continued to go up. So 10:53 would have been part of the 10:45 candle. So I was thinking, all right, the market kind of wicked here and would have started pushing down. So you can see I entered off the bearish candle, trying to take it back down. However, that didn't play out, but I'll show you how I had strategized to enter this trade. So I entered, let me show you exactly at 296.48, and then I go for a 2-to-1 risk reward at minimum, and then the risk, which was where actually I got hit out at, it wasn't a 2-to-1. You can see it was probably a 3-to-1. You see it, you see a 3-to-1, and then I was entering to the downside 3-to-1. I didn't get that entire push, but I'm almost certain that tomorrow I'm gonna be able to catch the move whichever direction it decides to go. Like, I have a doctor's appointment tomorrow, but I'm pretty sure I can read the charts, especially when it's trending, and you generally get like engulfing candles to the trending direction of the day, and also the MACD will match it up as well, and it's much easier. I'm thinking honestly maybe I should just not trade on Wednesdays, because even though it was Jerome Powell Congress Day, it still played like a Wednesday. It was still very, very whipsaw. I'm not sure if the liquidity is any different from the other days that causes the market to be easier manipulated, but something is happening on these Wednesdays. I'm honestly sure something is happening, because even when you get engulfing candle, you can still get the other candle can just wick so much that it knocks you out of your position, right? But that's it for today. You can see how the MACD is kind of being a good indicator at times, at least. So the MACD was a good indicator here. You had weakness in the MACD, but it started to kind of build up, and you can see that presented the bullishness in the market, at least for a short time period. And then when it starts to break down, you can see it breaking down on the MACD as well. And then you can see weakness, 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 weakness. And then this was like peak selling pressure until it kind of bottomed out. Weakness again. When you have this weakness here, you could have probably entered to the upside. And also you have the MACD's EMAs kind of signaling to the upside as well. So at this point, you probably could have exited as you saw it kind of pivot and make that upturn. And then here you can see where the MACD was kind of turning over and also like plateauing at this point. And that's a point where you can kind of enter to the downside, right? But just managing your risk, because here you can have like a very tight stop loss and take it to the downside with a big position. Say you entered with 500 shares here, you could have took a $50 risk and make $500. So I'm not going to do any of those until the strategy plays out a bit more, but just want to show you guys this. And I'll see you in tomorrow's video. Sorry about the power outage on the laptop, but I'm going to cut it out. All right. See you in the next video. Bye bye.